So today we're going to be talking about growing a small account. The most important aspect of growing a small account is risk reward. Why is risk reward so important? Risk reward is going to dictate everything about your entries and your sells, where you're basing your risk off of and where you're selling. One of the more common questions I have is, Huddie, when do you know when to sell? And the way I know when to sell is when the risk reward makes sense. So let's get into that with an actual chart example. For me, this stock, BTCS, it's going to be the play of the week. It's probably the best pattern I saw this week, and it's going to really emphasize that concept of risk reward. So we're going to get into the daily chart pattern and the intraday pattern, show you different levels. It's going to be confusing. You might need to watch this video once or twice to really get the concept. And trust me, I've watched videos 5, 10, 20 times, so that's nothing to be embarrassed about. In fact, you should do that. I know I talk a little fast. It's something that I'm working on. I wish I was better at it, and I'm going to get better at it. But for now, if I'm talking too fast and it's hard to understand, just watch the video again, really ingrain this concept of risk reward. So in front of us, we have a chart of BTCS. BTCS is a once upon a time Bitcoin stock. It's got a nice little story to it. Just a couple days ago, you can see it traded a lot of volume. It traded about 60 million shares. Why did it trade 60 million shares? Well, they actually came out with this press release. They said that they're going to pay their dividends in Bitcoin. It's actually the first company that's listed to actually say that they were going to do that. So it was kind of like an interesting PR. It's a trend. It's something that's going to attract traders' eyes. We're always looking for setups that attracts traders' eyes. So this one attracted traders' eyes. It had a nice spike. And ever since that spike, it's actually consolidated just underneath the breakout level in a very sideways and controlled trend. So what you have in front of you right now is the daily chart. When I'm looking at this daily chart, I'm always looking at the areas of considerable volume. So if you're looking at this daily chart, from pretty much August to December, this stock really hasn't traded a lot of volume. And then all of a sudden, all this volume comes in because of that PR. That's what's going to really spark my attention. That's what's going to put this stock on my scanner. So let's get into the part of the chart that's really important to me, which is going to be the part with the volume. Now, this is the daily chart, and the daily chart, yes, it looks good to me, but oftentimes in order to get a better representation of what this stock does, I'm going to switch to the intra-daily chart, which means I'm going to switch to a chart that shows the past 7 days, and it's going to show it on a minute-by-minute time interval. So let's do the 5-day, 15-minute chart, and this is pretty much what the stock has done in the past 5 days. This is the first day with the PR, where it ran from $3 up to $5. And ever since then, it has consolidated just underneath the breakout level in a very sideways and tight form. That's what generally I'm looking for. We go over a lot of these different types of setups in stock therapy. If you don't know what stock therapy is, definitely give that name a research. It's my friend and I, Dom. We go over twice a week webinars. We go over setups like this and talk about how we enter and how we exit and really get into the minutia of the trade setup. So this is kind of an example of that, but we're really going to be talking about risk reward more than just entries and exits specifically. So we have a stock, again, that spiked to 5, and ever since 5, it's held this really nice channel. I'm going to get some crosshairs out for you guys to draw some lines. We've had this really nice, we have this top at 5, but what's really more important to me at this moment is how many times we've rejected off of this 480 level. It seems like this stock really doesn't like 480. We tapped it once, we failed, twice, failed, 3, 4, failure. And then a couple days later, we tapped it again and still continued to fail. So that started to become a very key level for me. That's a very significant level. I really wanted to see how the stock reacts when we break above that level. And then if we break above that level, do we start to hold it, right? That's generally the concept of a multi-day breakout. That's the setup we're looking at today. But again, I don't want to get into the minutia of actually trading a multi-day breakout. I really want to talk about risk, reward, and timing that sale. How do you know when to sell a stock? You really never know how high a stock's going to go. You have an idea. You have an expected reality of what is possible and what is not possible. There's a lot of things I could say about BTCS. In the past, it is a former runner. In the past, it has run for multiple days. So are traders going to be interested in trading this stock for multiple days? There are a ton of variables that you can line up to increase your conviction. All things that, again, I don't have enough time to talk about in this video. That's more of a stock therapy thing. But what we are going to talk about right now is risk reward and timing this sale. Now, what is really important about risk reward is knowing what is not going to happen very often. A kind of a sweet spot for me is if I'm risking a penny and making 10 pennies, right? If I'm risking one and making 10, whether it's a penny, a dollar, whatever it is, I'm just using it for simple math. If I have a 1 to 10 risk reward ratio, that is really great. Why is that really great? Because I just paid for 10 more trades of a setup. Now this is where it might get a little confusing. This is where you might have to slow down the speed. I have to slow down the speed, and you might have to rewatch it. If you have a setup that is if you actually trade a setup and you make, if you're risking one and you make 10 pennies, right? This is the concept behind risk reward. If the setup, wins 50% of the time, right? So, let's say, you're risking 1,000 and you make, 1 to 10 risk reward. So you just made $10,000, right? Now, if the setup itself has a 50% win rate, right? Let's say your next 5 trades, you lose. And let's say, on all 5 trades, you're risking $1,000. So you made, 1 to 10 risk reward on your first trade. You made $10,000. Your next 5 trades, in a row, you lose 50% of them. That's just, a general example. So you're now left with $5,000 in profit. In theory, if the stock has a 50% win rate, the next 5 should be winners. They're not all going to be 1 to 10 winners. Some might be 1 to 5, some might be 1 to 3, some might be 1 to 1 if the trade is not working out in your favor. But at least there is some profit on the table. This should exponentially and consistently grow your account. But you have to be focused on the right setups. You have to be focused on setups that have a certain win rate and have a certain expected average percent gain when you're in that stock. So in this case with BTCS, the breakout level here is 480 in my opinion. And when I'm buying a breakout, pretty much what I don't want it to see is I don't want it to spike to 534 like it did and then go straight back below, all of today's lows. That would be a sign of it not holding the breakout level, and I would want to get out of that loss. So where on the chart am I going to do that? Well, this stock has held, we'll draw the line again. The stock has pretty much held this $4, this $420 level for the past 3 days. But in reality, I'm not going to buy 480 and risk 420. There is a sweet spot. I do like, specific risk rewards. I generally don't like risking more than 10% of my position size on any given trade, because that's going to, the tighter I have my risk, the more, risk reward potential that there actually is. So I'm not going to risk all the way down to the lows of the chart, because at that point, it's not holding the breakout level. I don't need to risk that low. I can probably just risk the day low. If it goes red on the day, if it goes below the previous day's closing line, that's going to be a big sign of failure. And I'm going to think that the stock is not going to be able to come back so easily. So this is the market open of the day. So this would be, roughly, low of day. I actually know exactly what low of day is. It's 446. And this level that I've drawn this line at is 475. So this is, again, slow down the speed and hear me out for just a moment. If I am buying 475 and I am risking 445, which is the low of the day, and 475 is the breakout level. So, I'm buying pretty much 476 when it breaks above, and I'm risking low of day 445. I think we can all agree that that is 30 cents of risk, right? So in order for me to have a 1-to-1 risk reward trade at 475, this stock needs to spike 30 cents. For simplicity's sake, I'm just gonna say 480. I'm gonna round up. And so a 1-to-1 trade is going to be at $5.10. If I buy for, 75, 480, and I'm risking 445, I'm pretty much risking 30 cents. When it goes up 30 cents, I have a 1-to-1 risk reward trade at 510. At 540, I have a 2-for-1. At 570, 3-for-1. At 6, 4-for-1, so on and so forth. This stock, in a very well-mannered way, meaning, once I bought the breakout, it never went below the breakout. It pretty much touched the breakout and then held and then continued its uptrend higher. This was a stock that I could have stayed patient in. And, had I made it, I'm not saying that I, will always make it to this point. I don't always swing a stock overnight and look for it. Sometimes it happens intraday. Sometimes it happens, over multiple days. Sometimes it happens in one day. But the fact of the matter is, if you had bought this breakout at 480, roughly a day and a half later, the stock had hit a high of 750. If you do the math there, we're risking 30 cents on the initial purchase, and selling at 750, that is a 1-for-9 risk reward trade. Generally, I like to personally risk $1,000 on my trades. So, if I'm risking $1,000 on that 30 cents, call it 3,000 shares, and I make it to 750, that is roughly a $9,000 profit. That is 1 to 9 trades. But I try not to focus on the dollar amount. I try not to focus on the percent gain. I'm trying to focus specifically on the risk reward attributed to this play, which was 1 to 9. I don't care if it goes higher. if I can make a 1 to 10 risk reward trade, I just paid for the next 10 trades. And if you go back to that equation that we discussed earlier in this video, you'll understand that with that 50% win rate, even if I lose the next five, if I start winning, even if they're not 1 for 10, even if they're all not that ideal scenario, some of them might be, some of them might not be. But at the bottom line, my account is growing and it's growing consistently. And in order to do that, you need to focus on a couple things. You need to focus on setups with merit, focus on your entries, and stuff like that. Focus on certain market caps. You really have to narrow your focus and make sure your criteria is so strict that you're really only trading the best of the best potential opportunities. These are, again, all things we go over in stock therapy. Certain criteria we like for stocks, certain, big picture plays. For now, with this play, really what you have is just a multi-day breakout look. There are different things that I use to qualify whether I want to trade a multi-day breakout. It comes down to volume, to what the daily chart looks like. Is there overhead resistance? What is the market cap? Again, I cannot list all of the variables right now. That does take much longer and a lot of more examples for you to really understand the concept. That is definitely a thing for stock therapy. So look in the comments, look in the descriptions. We will drop that link. Check it out. We have a great $5 offer right now, something to allow you to get your feet in, put your feet in the water, test it out. If you like it, great, sign up. If you don't, it's $5 for a week. You get 2 different millionaires who have made $1 million trading penny stocks, just like BTCS. You get both of our opinions. My opinion is not, God's opinion. His opinion is not God's opinion. We can be wrong, we can be right. But this series of checks and balances and having multiple traders to talk about, the same setup that we both trade really gives a good perception of what's going on. So definitely check that link out in the description, and we're excited to see you there. Thank you guys so much for watching this video. Again, if you like this video, hit that like button, subscribe, and check out Stock Therapy in the description. We have tons of videos in Stock Therapy that are archived, different setups just like this, as well as other videos on YouTube. So definitely look through the catalog and click around, see how much you can learn. YouTube is a great place for everyone to become knowledgeable, whether it's just about stocks or just general information. The internet is literally at your fingertips and you should utilize that.